Hello, everybody. Welcome to Tuesday. The S&P 500 was up 2.5% today. Nice green shirt day following a red shirt day. This has been going back and forth between these shirts. I use these colors to represent what happened in the market. So plus or minus, 1.5% means green or red. Just kind of something fun we started years ago. And really, today was an interesting day. We actually used today to lighten up our position in equities. As you recall, we had 63% overall exposure to the stock market. We reduced that down to 23% after Liberation Day. And then pushed it back up to 33% after the pause. And we're moving back down to the 23%. So, most of the clients are actually at zero. The people that still have highly appreciated assets or legacy positions that they don't want us to sell will retain in the market, at least for now. And we took this opportunity to move out really based on a couple of different things. First of all, a lot of what I talked about yesterday. Number one, the thought process that's going behind the idea of firing the Fed chairman and replacing the Fed chairman before the end of their term. This is totally unprecedented. The market would respond very negatively. And it is one of the big factors that fits into, the narrative of why you want to invest in America in general outside the US, which is that we have this stable form of government with this independent Federal Reserve. And if you get rid of that, that's a big, big problem. Now, they might not do it, but there's an awful lot of chatter about it. And at this point in time, you kind of have to take them serious. It's not just like the first term where things were being talked about and didn't happen. Liberation Day was an eye opener. You're going to talk about, that how that works and how those tariffs came down. That kind of got you thinking about, all right, got to listen to what they're saying and react to that. So the other thing is that the strength of the position that China has. I mean, the more you dig into what China has done and how they've gotten themselves ready for these, tariffs, the more you realize that they've got a really good position. It's going to be very difficult for the U.S. to win the tariff war in this particular situation. There's lots of different pieces, but the things that stand out to me is their control, 90% control over processing of rare earth metals, which is critical to so many industries. Lithium batteries come from China for all intents and purposes. The other one that's very interesting, it's not getting talked about enough, is antibiotics. They have a stranglehold there also. So imagine, you're in a negotiation with a country that has this, capability of pulling back rare earth metals and antibiotics from your country. It's going to be hard to win that. So I'd like to see some more, capitulation on our side, which we've already started. We have these carve outs, for say the iPhones and those different types of things. But more of that has to happen, or some other aspect of it, has to continue to evolve. Because it's just the strategy. If we're trying to box up China, then we should be rallying ourselves around all these other countries in the world. But instead, we're giving them tariffs. So I'm struggling with how the end game comes out here, dramatically into our favor. Yes, maybe we do get more manufacturing. I think that would be a fine thing, especially if it was high-end manufacturing. But that's going to take a long time, and we've got this big gap. And we don't even have a tax cut yet. And of course, that's not getting talked about enough. So the news is going to be struggle with that. But we talked about at the very end of last year that we could have this gap. You can do the tariffs right away. You can't do the tax cuts right away. So we're inside that gap. I feel like the risk level is high enough here, combined with the threat of, removing the Fed chairman, that, it's a good time to sit back and see what happens. And I hope I'm wrong. I hope the market goes skyrocketing. I've always had a philosophy that I'd rather preserve what I already have and maybe lose out on some of what I could have, if that makes sense. So market could jump up here. I would be, disappointed to not be in there. Most of the time I'm in there. We hung in there during the 10% downturn that happened in 23. We were rewarded, very nicely. But this isn't the same situation with these tariffs still hanging over. I think you have a limited upside. You're going to have these up days. They could be quite strong, actually. Lots of dip buyers are coming in. But the primary direction is no longer up. And so if you're dip buying when the primary direction is down, you got to be really careful because it can continue to go down. The major move is still to the downside. And really what you're supposed to do is the opposite. You sell on the little movement. So when the primary direction is down, the little up movements are the minor motion. All right. The major motion down, minor is up. And so you take your advantage and lighten up your exposure during those periods. until you start to see some evidence that that you're starting to see a differential in the primary direction. If you look at the highs, look at the chart, look at the any chart, hourly chart, whatever it might be, the highs are lower and lower and lower. They're cascading downward. That could stop. It could be we already hit the bottom as far as that goes. But until we start to see some higher highs, that's the first piece on the checklist. Usually, we've had the death cross already for the S&P 5 for the 50-day moving through the 200-day, et cetera. So, good time to be cautious. Sit on what you've got. Let's see what happens. I do think there'll be some opportunity here. But I'd like to see some more, evidence of progress in the tariffs. We're hearing about a lot of conversations, but we haven't seen anything concrete. And we're even hearing about some conversations with China, but certainly haven't heard anything concrete from that either. It's because what we have is not sustainable. And so it has to change. It has to change fairly quickly, in my opinion. If we're still here in 5, 6, 7, 8 weeks, someplace in that time frame, these inventories are going to run out in some of these different companies, and they're not going to be able to get what they want from China or can't afford to get it, especially if these tariffs stay in the same spot. So you're going to start to see all kinds of problems from that, in my opinion. Again, probably we avoid that because those problems are known, but it's not guaranteed at this point. So I'd like to see some more of that. Anyway, looking forward to seeing what's going to happen here. We'll talk about this again tomorrow. Thank you.